Stephen Mayne, you have been against this deal for quite some time, really. So have you got what you wished for with Rio now walking away from the Chinalco deal?
Well, if you look at the share price movements of Fortescue, BHP and Rio, Fortescue up 15%, Rio up 11%, BHP up 8%. You're talking value creation for the equity owners in those three stocks of well in excess of $20 billion in one day. Now, I've never ever seen a sort of a corporate deal create so much equity value in one day. And so that simply says that it's great for the shareholders of all concerned. Obviously, it means it's terrible for the customers and the pricing power, so the Chinese will be spitting chips, although as the largest shareholder in Rio with 120 million shares or 9%, they will be pleased to see the dramatic re-rating of the Rio share price. The Chinese will get their US $290 million break fee. But I think the European regulators will have a lot to say about this. I think Graham Samuel will have a lot to say about it. And I think you will see open access on most of that infrastructure in the Pilbara as a result of this. That will be the trade-off, and that is why Fortescue shares are up 15% today.
OK, so what is the impact really for Fortescue? You're saying it's very positive for them because they will get open access up there in that region.
It's extremely positive for Fortescue because they will get open access. They'll be able to, I think the regulators will force the combined BHP and Rio to run regulated open access regimes down their rail lines and through their ports, and equally Fortescue becomes a far more attractive equity play for the Chinese government now. They've only got 16, 17%. They won't be able to get control of BHP or Rio. I think you'll now see the Chinese turn their sights on getting a greater equity interest in Fortescue and then getting access for Fortescue down all that combined open access infrastructure in the Pilbara.
Can the Chinese be peeved enough for it to hurt the new joint venture?
Oh, they will be completely peeved, but there's nothing they can do about it. Iron ore is the lifeblood of China because they need it for all the steel, for all their urbanisation. They're close to being self-dependent on coal, so with coal they don't mind, but they are most exposed on iron ore, and the Pilbara is the world's largest iron ore province. When you're talking about combined production of, 300 million tonnes a year plus, and the Chinese are taking more than 60%, I think it is, of all iron ore, seaborne iron ore, they will have to deal with BHP and Rio, and they can be as angry as they like, but they won't be able to deal with it. They will have to rely on European regulators, US regulators and the ACCC to allow open access and for other mines. I mean, they've got some mines there of their own that they're backing some of these other startups. They'll have their little interest through Fortescue. They already have equity interests in some of the mines through BHP and Rio, such as Channa, where the Chinese government already own 40%. But at the end of the day, they'll be furious, but there's not much they can do about it. And the other big winner is the WA government. I mean, Colin Barnett threatened higher royalties before the WA election. If this deal goes through, he will now impose higher royalties on the combined BHP Rio, and with them forcing through higher prices for customers, hundreds of millions of dollars of windfall royalty gains going to the WA government, which needs it.
Yeah, well, let's hope some of it goes back to, ports like Port Hedland and the town of Port Hedland, because they've always been barking that they don't get enough of the royalties. But, Stephen, the rights issue, I'll stay with you for a moment. Just explain to us how the rights issue, what is the impact for shareholders and how it will benefit shareholders?
Well, effectively, it's a one for two, effectively, and they're raising US $15 billion. It's a massive discount. It's just under $30 is the price. It's renounceable and it's pro rata, which means that if you don't want to take up your entitlement, you can sell the right to someone else. So for the first time in this massive deluge of capital raisings we've seen in Australia over the last 6 to 12 months, we actually have a company raising capital in the fairest way, which is a renounceable rights issue.
Right, so every shareholder gets access to it.
Every shareholder gets access to it, and if you don't want to take it up, you won't be diluted. You can sell your entitlement, you can sell your right to someone who wants to take it up. And the fact that the share price has rocketed today, even after a massively dilutive and discounted rights issue, just tells you the literally many, many tens of billions of dollars which today's announcement has created, whereby, you know, they're dealing with their debt issue in one go. 30 billion Australian, pretty much raised, courtesy of the 5.8 billion US from BHP plus the rights issue. That will halve their debt to 30 billion, so all debt issues removed. All upside to the joint venture retained.
How's it all removed?
Sorry, not all. Left? Isn't it? Aren't they being left with something like 23 billion in debt, which is still a pretty sizable chunk?
But the point is, if you've got 60 billion of debt and you pay off 30, and you're Rio Tinto and your enterprise value is back pushing up 200 billion, who cares about 20 billion of debt on a $200 billion company? Rio Tinto is now rolled gold, AAA, impregnable, independent forever.